Okay, I think we're live. Hey everyone, it's just gonna be a couple more minutes before we start talking about the market. We're just waiting for the rest of the team to jump on a call, and once they do, it's gonna be probably 2 or 3 minutes, and then we'll get right into it. Welcome everyone. The call is gonna be about 45 minutes long. We're gonna talk about a variety of topics. First, obviously, briefly touch upon what's going on with Bitcoin, what we're seeing in its on-chain and social data. And then from then on, we're going to move into some altcoin talk. So should be fun, as we already have a few people joining. Hey, Max. Max, will
I
you
didn't know.
be paying attention to the stream as well, just so we can?
Yes.
Okay, just so we're sure if somebody asks us any question, you can jump on the call, back on the call, and let us know, or you can text me on Discord.
Okay. Is the link still up? Already up?
Yes, it is. It should be in the general channel if Brian shared it. Let's see. If
Yes,
not,
got it.
you got it? Okay, good. Okay. Let's turn on a few charts and a few metrics while we wait. Some interesting stuff that I wanted to discuss today.
Okay, so far everything seems to work on the stream side.
Okay, cool. Keep an eye on it and just let me know if we have any sort of breakdowns in connection or wherever. All right.
Well, hello again.
Hello. We're already live, just so you guys know.
Oh, okay.
Yeah. Well, we had some people already on the stream, so I just didn't want them to wait until we are setting everything up. So just started the stream, shared my screen,
Okay.
in the meantime. By the way, there seems to be some sort of issue on my side with selecting exchange metrics for Bitcoin. Not sure what it is. Let me share my screen so you can see what I mean. Go to hello. There we go. You can. Oh no, I'm just an idiot that selected multi-chart, so that's why it's not showing. We're good. Okay. Is everyone here? Brian, did you share the link everywhere?
Yeah, it's shared everywhere.
Okay, cool. So sound okay? Video okay? Good. All right, let's start then. And yeah, as people come in, we'll just gonna let them onto the stream. And let me just start recording on my OBS. Okay, we're good. Cool. Hello, everyone, and welcome to another edition of This Week in Crypto. If this is your first time here, this is a weekly panel call where the Santiment team and community members get around and we just talk about recent crypto market events. But we do this from a more of a fundamental perspective. We talk about interesting market insights that we have discovered using our own metrics and indicators. So if you've never used Santiment before, I strongly suggest checking out sentiment.net during or after this call. We have developed hundreds of different metrics based on three sources of information that have nothing to do with price. These sources of information are on-chain data, social media data, and development activity data. So instead of just focusing on price-related indicators, which can be very often easily manipulated in crypto, what we wanted to do is create a platform which gives you a more comprehensive look of the crypto market and looks at it from different perspectives that you can't really get anywhere else. So Anyway, the link is going to be in the description of this video. I suggest checking out santiment.net during the call, and also joining our Discord. The link is also in the description of this video. If you don't want to wait until next Friday to kind of talk about the crypto market with us, we talk about these types of things every day on our trading channels within our Discord. So without further ado, we've got a lot of stuff that we want to go over today. So Brian, if you want to share your screen, I'll stop sharing mine and we can get on the road.
Sounds good. All right. So we're going to kick off today with a look at what our Bitcoin and Ethereum price model is doing versus our actual altcoins. And we're going to look specifically at this combined chart. So what this graph is showing is the price returns of every coin in the top 100 according to their market caps by their 3-day percent change, 30-day percent change, and 90% change. You'll notice, as you would expect, over the last 3 days, it's pretty difficult to tell outside of a few outliers like Wax and like Hive here. Not a ton of movement over the last 3 days, despite the very moderate decline that we had over the past 24 hours that we've since recovered on slightly. But what we're looking at is a lot of volatility on the altcoin side in the past 30 and 90 days. You can see that the green here is pretty high on a few of them, especially on the lower half and the last of the 25 of these from rank 76 to 100. And then the 90-day change, this is basically right after Black Thursday. So we'll see a lot of these altcoins that really got hammered on March 10th and 11th have recovered huge because of simply the fact that they were struck down so much that they had so much room to climb back up. And we can clearly see that, you know, projects like Zilliqa, Digibyte, Hyperion, Divi here, they had massive gains since then. And obviously, most of us didn't anticipate that we'd see quite this kind of recovery. But regardless, altcoins are the theme over the last 3 months here. And we can see when I individualize it over just the last 90 days, the same story occurs. You can see that these bars for the altcoins have basically been much higher, significantly more steep than what Bitcoin and Ethereum have done. And Bitcoin and Ethereum have been no slouches with returns of 82% and 92% during this time. But this purple line here that you see, this is the average return of altcoins ranked 3 to 100 versus just Bitcoin and Ethereum. So the average of Bitcoin and Ethereum's return is 87% versus the average of the 3rd to 100, which is 121%. And that's pretty significant. And if we look over at the 30-day chart, it's a similar story, 10.6% or so for Bitcoin and Ethereum versus 28.1 for everything else. For even the 3-day, we've had a little bit better of a return for altcoins, though it's pretty statistically insignificant compared to the other two. We had about -3.25 versus -1.65 for everything else. So overall, looking back at this combined chart, altcoins have been the story, and whether we would call this altcoin season or not is up for debate. Personally, here at Santiment, we want to resist using glorified words like that, as it implies that altcoins are basically just the dominating presence. And that's pretty hard to say when Bitcoin and Ethereum have also been doing extremely well too over this time stretch. So yes, there is a gap between altcoins and what the top market cap ranked coins are doing, but it isn't enough for us to just say, you know, hey guys, it's all about the alts right now, and that's where you should be. And Dino will, of course, go into that more with his segment about Bitcoin dominance and some of the actual quantified metrics that we've used. But another thing that I sort of built using this Sandsheet template just yesterday was a chart to look at how the percentage of volume and percentage of daily active addresses have changed from Bitcoin compared to everything else. So Bitcoin here is the blue line, and we are looking at just the past 3 months of what its volume percent change is over that time period. So looking at this, Bitcoin, as you would expect, has a bit more stability than the combination of all the other altcoins in the top 100. And there's a pretty wide gap as you go further and further down. Overall, there's about a 14,440% upswing in volume, whereas altcoins, it's just at about 20,000. And that's pretty significant because it's showing that the volume over time is just continuing to pump higher and higher, and the gap is going wider and wider, despite the first, 2 weeks or so it being pretty close. And you'll notice there are big jumps in the altcoin volume line here in a few spots. For one, it was right here at the local top on April 9th. We had a big steep jump here. And then we had another local top here on May 7th. And there was another steep jump in altcoins. And what this tells me, and I need to do more research on this before I can ultimately say that every local top in Bitcoin is due to altcoin exuberance. But what we are seeing is whenever there is a steep jump in volume, there seems to be a bit of a retracement in Bitcoin. And this tells us that there is still a heavy reliance on Bitcoin needing to have a healthy dose of dominance in the crypto markets. And if people get too high on altcoins, it's usually because they're leaving Bitcoin to put their money into altcoins. They're not just depositing USD and saying, I'm going to put a whole bunch down on Zilliqa. It's usually coming from their BTC stack because that's where most of the trading pairs are. And so whenever we see these volume percentage jumps, it's usually correlating with a retracement soon after. And I find this pretty fascinating. You can even see it just slightly here when it curved up. This was our latest top, right? June 1st, we were at about 10,167. As soon as the altcoin jump hit, that's when Bitcoin retraced. And I think it's a pretty interesting thing that we need to, write up a report on at some point, which I'll probably do in the next couple of weeks. But cool stuff here. And you can see the dotted line here is the daily active address percent change. And it's a little harder to tell because they're much closer together. But you can see when they separate, that tends to correlate with volume pretty well. So right here, for example, this is around when the top came from 4.6 to 4.9. We also see a big separation just in the past, 10 to 11 days, right when June started. That's when the DAA started to climb, and sure enough, we hit a retracement right here. So I have yet to see a big separation in altcoins volume or DAA from Bitcoin, followed by a big Bitcoin jump. It's usually the opposite. And you can actually see it here in the year snapshot as well. There were a few really big jumps here, right when the top hit for July. We had kind of that double top last year. Huge jump here, big Bitcoin retracement. This one came more along while a Bitcoin retracement was already happening. And then when Black Thursday happened, you can even see a little jump here. The most previous one was about a month ago in early May. Big jump here, price stop for Bitcoin. So I want to investigate this more. I think it's really cool, and I'm sure you guys will have detailed questions about it that I want to be able to answer properly. But it's important we do our due diligence before we, call this just an easy top indicator.
I mean, yeah, that last spike is super interesting because that was the halvening pump. May 8th or
Right.
9th, I think, was the top for Bitcoin there. The last
Yep.
one before the one in June. So I think that was maybe 3 or 4 days before the halvening. I remember quite clearly that the bullishness was kind of super. I think it was peaking at that time for Bitcoin specifically. So it's interesting. I think we've also seen the amount of bullish sentiment kind of start to um, dip around that same time, and it's interesting that here we also see a rise in trading volume for altcoins at the same time. So seems to me like at this point in time, it was very clearly that there was some sort of a capital flight going on from Bitcoin to these more volatile assets because people were, not very confident about Bitcoin keeping its price above 10K, and it became a self-fulfilling prophecy at that point. So it's very interesting. Obviously, it doesn't like seem here as a huge bump, but when you go back to that 90-day chart, you can definitely see kind of a strong, yeah, there you go. You can definitely see a strong uptick there right at the top. Very interesting stuff.
Yeah, and it's also interesting looking at the 90-day versus this year-long chart that the daily active addresses over time grow much slower for the altcoins on average than it does for Bitcoin. Despite volume separating more and more, daily active addresses are actually much more consistent for Bitcoin. You don't see it so much on here where they're about even. I'm sorry, that's actually percent of total, which I was experimenting with. This is the one. So yeah, there's just a small gap here between altcoins and Bitcoin's DAA percent change. But on the 365-day one, Bitcoin had a huge head start. I think at the the middle end of 2019, back when Bitcoin was really the dominating presence, and altcoins have kind of lagged behind up until recently, where they've kind of become a little more parallel.
Yep.
So
I mean,
that's
that
interesting
also
too.
makes sense. I think is the fact that you typically see these spikes in daily active addresses for altcoins during the rallies, right? Whereas Bitcoin tends to be fairly consistent in terms of its on-chain activity year-wide or year-long. Whereas for altcoins specifically, you are going to see these massive spikes or the biggest spikes in actual network activity around the rally. So for me, this would like long term, this would be a bullish indicator as far as Bitcoin is concerned, is that no matter the general price action, the Bitcoin's daily active addresses continue to grow at a fairly consistent pace.
Yeah, absolutely. I think this is really cool, and I think that altcoins in general are obviously going to be the more volatile ones and see big separations like this. But thanks to their volatility, you can really find these big jumps here that can give some fascinating information.
Very cool. Okay. Should we?
So I'm gonna stop presenting, my end, and have you go over Bitcoin dominance, and if there's time, we can quickly go over some NVT stuff, DAA stuff like that.
Okay. So I'm going to very briefly touch upon just general Bitcoin's metrics over the last 24 hours or so, because I think there's some interesting stuff that we should touch upon. So very briefly, first of all, let's talk about Bitcoin social volume. So what you're seeing here right now is the Bitcoin social volume over the last month. By social volume, what I mean is, for anybody that's not familiar with how we calculate this metric, we have a data set of over 1,000 different crypto-specific social media channels. So our system records messages, hundreds of thousands of messages daily from Telegram groups, crypto subreddits, Discord channels, private trader chats that are hidden from Google. So Twitter accounts, anywhere that we know that there's discussion about cryptocurrencies going on, we tend to collect that data, and we are able to plot it against the price of any specific coin. So currently, you're seeing the social volume, or the amount of mentions of Bitcoin over the last month, plotted against its price. And this is the latest one is just the one that I wanted to mention. Is very often we see, like, if you zoom out a bit, maybe for the last 6 months, you'll very often see these spikes in the social volume kind of correlate with either local tops or local bottoms. So here you can see them earmarking both local bottoms here, obviously during the Black Thursday dump here as well. And it's no surprise to me anymore when you see these spikes in the social volume right around the local bottoms for Bitcoin as well. Now, if you zoom in a bit, you'll actually see that the crowd was not completely correct, which I think Max is going to be happy about. So they actually made or they were right on point as far as the first bottom is concerned, but that was not the actual bottom. So very often, you'll see the crowd kind of jump the gun a little bit. So the spike in Bitcoin mentions was pretty much a completely in line with Bitcoin's first bottom on June 11th or yesterday, but it was actually the first of a sort of a double bottom here. But since then, yeah, we started on a recovery path very quickly afterwards. So it's once again, I just wanted to kind of showcase just how easily sometimes you can gauge the short-term price action of Bitcoin or any other coin in our database just by looking at its social mentions over time. Now, speaking of social mentions, let's briefly look at Bitcoin related sentiment. So here we're basically just looking at the amount of mentions of Bitcoin over time, but you can't really tell whether these mentions are bullish or bearish, if the crowd is actually rooting for Bitcoin or it thinks it's going to dump. So what we've also done is we've developed our own sentiment algorithm where our system tries to label all of the messages that we collect from these different social media channels. It tries to label them as either positive or negative in their sentiment, in their mood. Now, obviously, we don't try to overfit the model, so any sort of message that our system is unsure about, it just basically discards from the results. So only about 70% of all of the messages that we collect and parse through our system end up on this chart. And this chart in particular is what I wanted to show. It's called weighted social sentiment, which essentially what it does is it shows the difference between positive and negative sentiment toward Bitcoin over time, but it adjusts it or it weighs it by the amount of social volume or the actual amount of mentions for Bitcoin to make it even a bit more reliable. So if we look at the last maybe 14 months, because I think that kind of can give us some hints into where I think we are currently in the market cycle, you'll see currently that Bitcoin is very bearish, or the Bitcoin related sentiment. Here we're looking at the sentiment on Twitter specifically because our system was trained on Twitter's data, so it's usually the most reliable. Bitcoin sentiment is very bearish at the moment. It's currently around minus 0.5 standard deviations from the mean, which essentially what you want to see is you want to look at these large spikes or dips. The higher or the lower this chart is, the more extremely bullish or bearish sentiment towards a coin. So currently, ever since basically, so this was the top, right, where Brian showed the spike in social volume in trading volume for all of these altcoins. And we saw the decline, as I mentioned, in the bullish sentiment around the same time as well. And it started and continued to drop all the way down to now a very strongly bearish sentiment towards Bitcoin. Now, some might think that this is actually a pretty bad time for BTC, to buy BTC, or just in general to be in the market. But if you really look at the general historical trends, it's not the case. Like, in fact, most of Bitcoin's tops over the last year came in these very extremely bullish, undertones or atmospheres. Pretty much all of these local tops, as well as the two biggest tops in 2019, came from a strictly bullish atmosphere. Now, as far as the rallies for Bitcoin, you can see them pretty much always originate from a continuously or ongoingly bearish sentiment. So here as well, obviously after the Black Thursday dump, we were pretty bearish in terms of in terms of our data, and then Bitcoin's recovery started. So the fact that we are continuing to be very bearish as far as the crowd is concerned about Bitcoin should be a fairly good sign for Bitcoin's short-term action. Obviously, not financial advice. I'm just showing what what the general historical trends have shown. And I personally think that we might be seeing this sort of pattern repeat itself, where there was a very high or a very, very bullish sentiment here before this short-term correction, which we experienced here, and then we dipped into a severely bearish territory before Bitcoin broke above 10K and above 12, 13K even. So hopefully we are going to see the same thing happen for BTC as well. Now, obviously, if because of this latest sort of dip, we now start seeing a more of a bullish breakthrough in terms of its sentiment, that might be a different story. But for now, the sentiment continues to be very bearish for BTC. All right, one more thing that I wanted to mention is the fact that the same time that we saw the Bitcoin's price drop, we saw a almost identical spike in the exchange inflow of several of the biggest stablecoins. So if we look at USDT and USDC, two of the biggest stablecoins currently by market cap, and if we plot it against the price of Bitcoin, which we're doing here, so essentially what you're going to see now is the inflow of these two stablecoins to known exchange wallets. And let's zoom in just a bit, maybe the last month, maybe even the last week. Yeah, there we go. So what we can see here is we can see this sort of conglomerate of spikes right around Bitcoin's latest bottom, which is something that I've started noticing more and more, is that when we start seeing these short-term corrections for Bitcoins, their bottoms are usually earmarked by spikes in the amount of stable coins moving to exchanges. This time it was specifically or predominantly the amount of USDC moving to exchanges, which went from maybe a couple of 100,000 to here 2.48 and also 2.6 million USDC. So about $5 million, I think, worth of USDC have been moved to exchanges right as Bitcoin was bottoming out. Why? At least the premise of mine is that this was an added buy pressure, people just looking to buy the dip, which has been seen quite a few times in the past. Let me show you the last 6 months, and maybe you can see some additional sort of supports for this theory. So over the last 3 months, yeah, we saw this massive spike here as well before the rally. We also saw another spike in USDC exchange inflow right after Bitcoin started, dropping after the pre-halvening dump. So yeah, this is something that happens quite often. We've also seen one immediately after BART. Amount of USDC to exchanges spiked, which led to this or coincided with this rally in BTC as well. So overall, it's quite a good sign, I think, when you see the amount of stable coins moving to exchanges spike after Bitcoin's bottom, because it indicates that there was indeed fundamental support for this uptrend or this bounce back in the amount of people that were actually looking to buy the dip. Now, I'm going to stop here as far as Bitcoin related data is concerned, as far as the last 48 hours, because the topic of today's video is the altcoin season upon us? There's been quite a bunch of talk recently about altcoin season. I'm seeing some of the tweets like this. Are we getting closer to altcoin season? I'm seeing people already start to discount altcoin season. The performances don't scream that it is altcoin season yet, and stuff like this. So we wanted to kind of take a approach from our own data and try to figure out what we're seeing in terms of the fundamentals for a bunch of different altcoins that have been pumping over the past couple of weeks. Whether there were any patterns that we could have seen ahead of time to suggest that these pumps were going to happen, and whether these really indicate a market-wide altcoin season or these are just a number of individual use cases. So Max, if you want to share your screen, let's start with Bitcoin's dominance chart, because I think this is, if we are going to talk about altcoins booming and breaking out, so we should see some proof of it in just the general dominance of Bitcoin over the last couple of weeks, right? So if you want to share your screen and just show us what Bitcoin dominance chart looks like now, that would be good.
Wait, I will share, but first introduction.
Okay.
The reason for the talk we want to have about altcoins and Bitcoins, it's because of the fact the money, as we know, dollars, francs, euros, I know everything, will be developed over the next years. Like, there are committed governments to do it, and it will happen, regardless of what we want or if we want it or not. Now, where the value will come? Will we have inflation, or will we have inflation or deflation? It's an interesting question, but we will not cover it. What stays for sure, it will flow into the assets. And the difference between now and 2007, when we had the same situation and all the money flew into our financial system, at that time there were no cryptocurrencies as financial asset. Now it does exist. And it has special things to offer to investors, like independence from government, decentralization, all these things. and a very nice track record of and volatility, of course. And part of money will flow into cryptocurrency. There is it's a main sentence which we need all keep in mind. There is no way back. Part of will flow to normal stocks, part will flow into cryptocurrency. Now, will be is all the way straight line to, I don't know, Bitcoin 100,000? No, it never happens like this. And actually, by the way, it's not a given that it will be Bitcoin. But the money which is now printed in trillions will flow into financial assets, yeah? Because there are enough people, rich people, and they will try to save their wealth. Just now we start sharing charts. Okay. Now we start, and it's a kind of fundamental topic why we discuss. Yeah. My entire screen. Okay, let me see. The first thing we start from is correlation between Bitcoin and Ethereum. Just to tell you that it will happen.
You mean, sorry, Max, you mean Bitcoin and S&P, right?
Yeah, what did I say?
Bitcoin and Ethereum.
Oh, okay. Well, it's also interesting. Yeah, but I mean Bitcoin and S&P. The way how you can pump or increase value both is different. S&P is also could grow nicely and happened before, but they have different patterns. They only crash together. Yeah, and as you see now on the chart, the coupling started and accelerated recently. Yeah, and we used to have close to 0.6. It was Black Thursday when everything crashed together. Ever since then, it was decoupling, and first Bitcoin was rising, and S&P was rising, then again Bitcoin. Now they crash together, so it's aligned, but they live their own lives. So this is important to understand. Bitcoin and S&P now live their own lives. Sometimes it's related, but generally it's not. Yeah, they will live separately. Now, if we look, you still see my screen?
Yep.
Okay, so now if we look at S&P, so this is a Black Thursday crash. We did not recover till the top, right? We did recover above the top in Tesla. We did almost like not double, but much higher above the top Amazon, and list goes on. Now for Bitcoin and Ethereum, yeah, now we're coming from classic finances to crypto, and this is where things start being interesting. And the main reason we're talking about alts. You see, it's an insight written, I think, by Gary, and you can find on our platform and the insights that Bitcoin, similar like Ethereum, shows the same behavior like S&P, DAX, Dow Jones, Nikkei, all of them. They crashed, almost recovered, but not yet. Yeah, so they almost made up to the top, but many alts, like they showed amazing behavior. Not only grew above the tops, they like double or tripled it. Many. We just pick up here, I don't know, Siliga, Aave, it's from DeFi protocol. Loopring, yeah, you can also say it's related to DeFi. KNC is part of DeFi. Yeah, and then Maker, and I don't know how many more. They all show the same pictures. This all top before Black Thursday. It's a history. It's a history for many alts. There is substance to altcoin season. There is substance. There are selected projects who are doing very well. They're growing in big volume. And if we're talking about DeFi, they're increasing their username or their user base. It's growing and growing quite rapidly in terms of valuations. Yeah? Of course, there will be corrections. And there is now a choice, major choice for us as participant of markets. Are we in the classic finance? Then we choose, okay. If we don't want risk, we do SAP. If we know something about markets, we pick up stocks like Amazon, Tesla. Or if we're in a crypto, we have the same choice. Are we sticking to Bitcoin or Ethereum, these two majors, or we're going to more risky altcoins? And this choice is by no means easy. You need to know when to do it. And the chart which you shared or you mentioned, Dino, now we're coming to it. This is a chart of Bitcoin dominance. think I will share it. Yeah. Yeah, it's now full screen. Yeah, it should be full screen. And as you see, as the Bitcoin dominance was the lowest, 35% at the top of last crypto bull market, which is logical and expected. When the prices are growing and ICO minus is the time, while everything pumps beyond all recognitions, Bitcoin is also increasing, but still cannot pick up its dominance. But after correction in the bear cycle, Bitcoin gradually taking over. Now it's 72% or around 72%. And this move from to also during the Black Thursday, or before actually Black Thursday down, and then correction up and down, you see the red line is a kind of support line. This is where alts tried to establish themselves. They did not succeed yet. So that's correct. So what you said, Dino, is correct. They did not succeed. There is no final confirmation where you say, okay, now you move all money inside in alts. But quite some of them did. And we tested support lines 3 times. If we break it at any given time, that will be a final confirmation that your focus should be switched from Bitcoin and Ethereum to altcoins, yeah, at some specific point of time. And at the same time, as this topic was mentioned quite frequently by many media, and it came into attention of many players, we believe right now it's a time where we will see probably Bitcoin and Ethereum again gaining ground, just as this topic disappears from the crowd talks, and then the next attack should happen. And if you're positioned properly, if you pick up your alts nicely, well, this is where you can outperform the market. Okay, that was a kind of introduction. And we started to work on a screener where we try to identify patterns or setups, how this pumps in alts happens. And I think Dino will share something, but it's ongoing work. Yeah, and it will take us next weeks if you want really to be yeah, on a latest status. Maybe you should join our Discord. We will be probably sharing the initial beta version of our screener and how we can do it, or you can contribute to it too. But now, Dina, I'm leaving to you.
Okay.
Yeah, I think it was just the last chat, but it's interesting also because the social metrics are quite cool.
Yeah.
What we have, you know, that if you have here, you go to Santiment. This is where you can analyze all database of our social messages, which are millions, and you can identify how trends are developed over time. So I entered alt or alt season, and you see the results, yeah. Of course, at the tops, and I compare it to Bitcoin price, yeah, because it frequently coincides tops and Bitcoin prices. This is where alts start pumping, yeah, because the whole market is in risk mode now. Everyone is experiencing profit, and big players taking profits from Bitcoin and moving to alts. And you will see that both by social dominance, it comes very nicely with stops here, lay stops, yeah, and also with social volume. But recently, lately, the last weeks and days, it's by no means on the top yet. Yeah, It's a kind of increased, so there is potential. There is much more potential behind it. Just I want to show, and you can do this setup for yourself in our tool and just observe it from time to time.
I mean, it's amazing that it spiked at the May 9th top for Bitcoin. It's quite, because that's the same time that Brian's template also showed the spike in alt volume. So everything kind of seems to make sense. Like if you were looking at the charts at the time, you could see that there's definitely like a, a renaissance in interest in altcoins. And Bitcoin dumped very shortly afterwards, but it didn't really last long, as you can see yourself.
Yeah, it's all about behavior of key stakeholders. And once you notice there is a hype, and of course with the top price, the hype chance is increasing. So pay attention to social metrics. It might happen that this pattern will keep repeating. Bitcoin, Ethereum pumps new highs, everyone goes there, and the smart money moving away again from Bitcoin, Ethereum to altcoins, or vice versa. Yeah, it's never good to follow the crowd, try to predict their moves. Yes, and now Dina will start sharing a little bit what we were able to identify, how you can see on a level of data, what are they doing, where is it moving, and where and when is it moving. So not to be the last, but maybe sometimes to be among the first ones. Okay.
Okay, cool. Right. Let's start by just generally talking about where a lot of these pumps came from. So, Gary, I think you shared with me a list. Let's see. Yeah, it's a Coinbase watch list. So, just recently, we've had a number of high-profile sort of listings of very popular coins on one of the most sort of popular exchanges. So I think in the past, Gary, how long was this? How long back did you go to look at these assets? Was this like people or tokens listed over the last what 20 days, 30 days, 50?
When is this list published?
No, I mean, how long, how far back did you go to look at the coins that got listed on Coinbase? Just this summer? So is it people or coins that got listed over the last month, or is it longer than that?
It's mainly longer,
Okay.
longer.
So, but anyway, these are the coins that, let's say, over the last 3 months or so got listed on Coinbase, right?
This is the list of coins that are being researched to be listed on Coinbase.
Oh, okay. These are okay. So then two different topics. Okay, so these are just coins that have not yet been listed. Because I'm not seeing MKR, so I was curious. Okay, so actually let's start then by the way, Max, I think you're typing or something, and I can hear it.
Oh yeah. Sorry. I was typing answer in our YouTube channel. Yeah. I'm switching to
No worries. Okay, so there's a few things that I wanted to just talk about in general when it comes to these talks about the altcoin season. So one of the things that this article mentions, and a few different pundits I've seen mention, is that there's been a spike in the trading volumes of coins like Ethereum Classic, Cardano, Matic, Theta, and OKB tokens, and people use this as sort of a proxy to say, well, we were seeing the spikes in trading volumes for a bunch of these coins, therefore, altcoin season is kind of on the rise. When in fact, I really think that for many of the coins that have started pumping, there is both a fundamental reason why, but also just a news-driven sort of, support for the rally. So let's start with Cardano, right? So when did Cardano start pumping? It's very simple. If we look at its price action over the last 3 months. This is, by the way, Cardano is like one of the top coins that are being mentioned as the argument for the altcoin season. So I assume this is May 28th. Yes, it is. So this is the moment in time when Cardano published that their Shelly update is going to be launched in the next month and a half or 2 months. So for those of you that are not aware, Shelly is a much anticipated update to the Cardano.
Excuse me,
Go ahead.
Users are not able to see your screen.
Okay, I think I didn't share the screen, so people on the stream can see it, but I don't think you can. Now you should be able to, right? Can you see my screen?
Yeah, it looks good, Dina.
Yeah.
Okay, I think people on YouTube. I forgot to share my screen, but I think people on YouTube have seen my screen the whole time just because the OBS is on my device. But anyway, so we're looking at Cardano, and we're looking at May 28th, and this was the point in time when we saw the Shelly update be announced as soon to be incorporated into the network. Shelly is a long-anticipated sort of software update that is supposed to make Cardano completely decentralized. And then another coin that has been mentioned as this argument for the altcoin season is Maker. Maker started pumping very aggressively around the same time, actually May 28th. But instead of any sort of like protocol update, this was the time that Maker has been announced to be listed on Coinbase, and this was the moment that Maker actually started trading on Coinbase. So you can see obviously that there have been pretty opportune times for Maker for not just altcoin season related reasons, but for very specific occasions in its in the project's lifecycle. If you look at ETC or Ethereum Classic, it's actually, it's been on an uptrend for a while now. It started growing around here, and this is when ETC announced that they are going to have a hard fork of their own. So even for Ethereum Classic, we saw some fundamental reasons why there should be a pump to begin with. And then Matic and KNC, I think we both covered them in our insights. If you guys go back maybe a week or so in our insights, you'll be able to find articles on both Matic and KNC. I wrote about Matic here, Loopring, Gary wrote about, and we, I think, covered Matic as well a bit further down. Essentially, there have been fairly good reasons for about 80% of the coins that we actually saw pumped, and for 80% of coins that are being used as argumentation why we're seeing the start of an altcoin season. So just from this perspective, usually when people say altcoin season, what they want to say is that coins are breaking out for no apparent reason. It's just a all out brawl where anything can pump on any given day. This is, I remember, maybe like early 2019, this was the type of setup that we saw. There were just every day we saw another coin get pumped for no good reason, and this was sort of the first inklings of evidence that we are in fact moving into an altcoin season. So far, I'm really not seeing that as far as an all-out network-wide effect is concerned. Now, as far as trying to find patterns that you might be able to use to understand why these coins pumped in the first place, maybe even if they are not necessarily news related, has there been something in their on-chain data that might suggest that some of these coins are going to pump? Okay, let's look at a few examples of coins that get mentioned a lot as reasons or arguments for the altcoin season. So let's start with KNC. And actually, I'm just going to use multi-charts here to take a few of them. The first metric that I wanted to show is very simple. It's called mean age, or mean coin age. And what this metric does, let's look at the last 3 months maybe. So what this metric does essentially is it shows the average age of all coins on the network. It calculates the average age that every coin on the network has remained at their current address, and then it plots it against the price of the coin that you're currently interested in. So what this does, the incline or the rising slope of the mean coin age suggests a accumulation period for the coin, whereas these dips in mean coin age essentially mean that there is a lot more activity around, in this case, KNC coins, meaning the trend has gone from accumulation into distribution. And very often, you'll be able to see these spikes or dips correlate with the coin's price action. So if we just look at a few coins and their mean coin age over the last couple of months before and into their rallies. So first of all, let's look at KNC. Okay, actually, yeah, price. So as you already were able to see, we saw a very strong accumulation period for KNC among pretty much all of the network holders until the first stop. And this is, almost exactly on point. We saw a very strong sort of distribution event where people started moving their coins, starting to take profits. And I assume that if we look at token age consumed, which tracks the movement of dormant coins or coins that have not moved for a prolonged amount of time, we should see a spike right here, and there it is. So essentially what this tells us is that up until this point in time, there wasn't really, long-term holders of KNC have not really been moving their coins all that much. And this was the point in time where we saw a behavioral shift among KNC holders, where it went from an accumulation to a distribution event. And so Afterwards, after the consolidation, part of the KNC's price action began, we saw another accumulation event occur. Over the last month and a half, everything has been going upward in terms of the mean coinage. There has not been really any notable spikes in tokenage consumed. In other words, indicating that people are still once again not moving their KNCs. The general trend has been accumulation. And then right as we started once again, experiencing choppy action and moving or making its way to the top, we saw another pretty big spike and another here just today, actually, if we look at it. So let me zoom in a bit so you can actually see how big this latest dip is. It's actually pretty big. So right around the time that we saw this rally for KNC really start pumping up, we saw another dip in KNC's mean coinage. So essentially, this is something that we see quite often. Coins start growing in price during the accumulation event and then start pretty much dumping or consolidating when the crowds move from being very confident in the coin's action and just holding on to them to distributing their coins and moving them to exchanges. So this is coin number one that I wanted to show. Coin number two is AAV or Lend. So a number of DeFi projects have started dumping, have initially started pumping and are now kind of experiencing these choppy actions. So for AAV or Lend, another DeFi related project, we see very similar patterns, at least in the last month or so, 2 months or so. So this time we see a very strong sort of mean coinage slope rising here. And then over the last couple of days, as AAV really started, reaching its top and then correcting, we saw a first kind of break from the accumulation stage into a more distribution sort of event. So once again, we are seeing people start moving their coins, probably to take advantage of the rally. But before that, we saw just a general sort of calm waters in the coins on-chain data. Not a lot of movement and people just being content with sitting on their bags for a while. Let's look at Maker as well. I think we're going to see a pretty similar image. There we go. So pretty much the same thing as we saw once again. We saw a few dips at Maker's kind of local tops and consolidation events here as well, and here once again. So you see that every time, the image is going to be the same. The mean coinage or the amount of this accumulation sort of within the network is going to keep growing before the rally really starts ramping up. And then as the rally kind of draws to a close, we are going to see the crowd start moving their coins much more aggressively and start to take advantage of the action. Now, in all of the three coins that I just mentioned, you can see that the mean coinage has actually started to kind of dramatically drop over the last couple of days, which to me would not really be a good sign. If you look at the previous dips in mean coinage, this is usually when we see short-term corrections for the coin. So essentially, even though a lot of these coins are being used as argumentation for a prolonged altcoin season, I would be very kind of worried about or concerned about their maybe short-term action or their price action within the next week or so, because people are starting to move their coins at a much more rapid clip than they did over the last month and a half or so, indicating that they are no longer content with sitting on their bags. The only exception out of all the coins that I was analyzing that really pumped over the last couple of months that is still kind of having a rising slope in terms of its mean coinage is 0x. So you can once again see 0x kind of the two really big dips in mean coinage happen here around this interim top for 0x, and then obviously during this massive top there was a big distribution event. But since 0x has continued to accumulate or the people the holders of the 0x network have continued to hold on to their coins even into this latest pump and dump here. So if I were looking into a coin that just based on their holder activity has the biggest chance to kind of maybe support an ongoing rally, it would be, for now at least, 0x in particular. Now this is just one of the few sort of different patterns that we were able to discern. I'll write an article about them and publish it later today. Another one that we very often kind of talk about is just general whale behavior for all of these coins. Like in almost 80 to 90% of the cases, what we see is we see a accumulation event or an accumulation period among the coin's biggest whales before the corrections really begin, or into the rallies and then dumps before the corrections begin. Okay, there's some sort of a messy. Just let me see where I was. Yeah, I was looking at this chart, right? Yeah. So this particular chart looks at the total balance in KNC of the addresses that are holding between 10,000 and 100,000 KNC. So in this case, we would be looking at well-off KNC holders. Some might even call them whales. And I think the picture speaks for itself. Pretty much we had these accumulation events, and the amount of KNC being held by these large holders kind of grow into the rallies and start declining around their top. So the first time it really dropped was around the first of these three-prong tops for KNC in early March. And then the second time, we saw another accumulation period right here into the rally, and then a whale started dumping right around the top and consolidation for KNC. And we're seeing a very strong dump among KNC's whales once again, which to me would not be a very strong or a very positive sign for the coin's prolonged price action. So if we go down this list and look at the whale activity for all of these coins, we're going to see pretty much the same or at least very similar image. So let's, for example, look at the top 100 holders of LRC over the last, let's say, last 6 months, just to kind of drive this point home. So currently, what we are looking at the top 100 holders of LRC. But if we click here on non-exchanges, what you're going to be able to see is only those coins, or sorry, only those addresses that do not belong to known exchange wallets. So here we're looking at the biggest 100 whales essentially, and what their collective balance of LRC has been over time. And once again, we are seeing this sort of accumulation pattern for LRC right into the rally. I think in most of the cases, what you want to see is you want to see big holders, whales, supporting the price rise in just by putting their money where their mouth is, and essentially rising their holdings before we see a price rally. So for now, for example, for LRC at least, the general trend for their biggest whales continues to be accumulation, and these are, I think, the reasons why. Some of the reasons why we have been seeing these individual spikes and individual pumps in certain altcoins. It's not because, at least in my opinion, it's not because there's been some, or there is some network-wide breakouts that can be explained by just people moving their money from Bitcoin into these, more volatile assets. I think it's just a number of isolated cases that have been propped up by both their fundamental data as well as a number of partnership and news and listing announcements that have contributed to this idea and narrative of altcoin season. In my own opinion, we're just not there yet as far as altcoin season is concerned. Yeah, and so I guess finally, one last thing that I wanted to show, which I found really interesting, but at the same time, this is very early on in our analysis. So if you want to kind of play around with our data yourself and don't really want to rely only on the metrics and the indicators that you see on our platform, you can tap into our API and you can get access to each of our metrics and try to run your own analysis. So one of the things that I've done, I was curious because most of these pumps that we've seen happen over the last couple of months, they kind of started around June 5th, right? So if you look at it here, yeah, okay, June 7th for MKR, maybe it was even earlier. Let's see. Yeah, June 7th. And then from June 5th, we saw this. And for most of the coins, like if we look at KNC, this is where the chatter really turned to, oh, okay, there's been sort of an altcoin season. Yeah, June 5th, June 6th, and then we saw this rise. So what I wanted to do is I wanted to check if there were any sort of patterns in the 20 days before the rallies really started ramping up that we could kind of touch upon and figure out, have there been any indicators in these coins on-chain data that could have let us know that some of them were going to perform better than others. So some of the things that I've done, I've used our API, which you can go to neuro.santiment.net and you'll be able to see exactly, if you're developer savvy, it's very easy to tap into it. And we also have this Python wrapper, which makes it super easy even for a non-dev like me to make their own analysis. So what I've done is I've looked at the period between May 15th and June 4th, and I was looking at the top 200 ERC20 coins, because this is what we have the most on-chain data for, and a couple of different metrics for them. So number one, I was looking into all of the coins that gained the most amount of new addresses in this 20-day period. So the coins that have gained the most, essentially onboarded the most new users between May 15th and June 5th, ahead of these rallies. Has there been any sort of, what has been the performance of these top 20 coins compared to the rest of the market? So here we're looking at the network gainers watch list that I made for these specific coins, and we can compare their sort of performance against the performance of all assets, which is another watch list that we have. So let's see, over the last 7 days, the market cap of the biggest network gainers, the 20 biggest network gainers, has been 6.5% for all assets. Let's just see as it loads. I think it's the slowness is on my side a bit. Okay, so we're seeing a 7-day spike or a positive growth of 6.5% in the market cap of these 20 coins, whereas the general market has underperformed and is currently 2.7% down. Now, if we look at the last month, the market cap of these coins has increased by 44%, whereas the market cap of the entire basically crypto market has increased by 14%. So it seems like if you were paying attention to the coins that started onboarding the most new users in these 20 days before these quote unquote random breakouts started, you would be able to pick out a few winners ahead of time. So essentially, I think we see this quite often is when people and networks start onboarding more users, this very often turns to or tends to precede a short-term price rally. So this is the first sort of analysis that I've done. I've just looked at the biggest network gainers, and it seems that they are performing much better than the general market. So the second thing that I wanted to see is I wanted to look at our deposit activity. So for those that are not familiar, one of the metrics that we currently have, let's maybe look at Ethereum because we haven't really talked about it all that much today, is the amount of daily active deposits. So if you look at exchanges, and you look at daily active deposits, you'll see something like this. So what daily active deposits essentially are unique addresses that are being used to transfer in this case Ethereum, but any particular coin, to centralized exchanges. So a spike in daily active deposits essentially means a spike in speculative activity. So I wanted to take a look at if there is any sort of patterns that we could have deduced in the 20 days before these rallies started, in terms of the biggest or the coins with the lowest amount of deposits, essentially meaning the least amount of speculative activity, as well as the coins with the highest amount of deposits in this 20-day period. So first, let's start with the coins that had the lowest amount, the 20 coins that had the lowest amount of deposit addresses, active deposit addresses in the 20 days before the rally, essentially indicating that maybe there hasn't been a lot of sell pressure. People have not been moving their coins to exchanges. They are content with sitting on them. So we now see a market cap rise in 9.11% in the last 7 days, which is still much better than the general market, which is currently, as we've seen, down by 3.69%. And in the last month, the growth is still better than the entire market. So it's 14.3% for the entire market and 24% for these 20 coins with the lowest amount of deposits. Now, even more interesting is when we look at the performance of the 20 coins that had the highest deposits, which would maybe indicate a pre-pump positioning. So these are the coins that essentially had the most active addresses that have been sending coins, these 20 coins, to exchanges ahead of these breakouts that started from June 5th. So let's first of all look at the 7-day market cap of these coins. It's up by 39.79% compared to, once again, minus 3.69% of the entire market. And within the last month, the market cap of these coins has increased by almost 100% compared to, once again, the minus 2.78% of the entire crypto market. So these are some of the things that I've started kind of playing around with. But it's very interesting to me that there seems to be, some sort of an event here, maybe basically, people in the know, whales, people with insider knowledge, maybe moving their coins to exchanges ahead of what they know is going to come, and this essentially becoming a self-fulfilling prophecy. So I think this is just another, example of how you can use on-chain data to beat the market. All three of the portfolios that I've made using our API have been in the last month outperforming the market by quite a substantial margin. So this is kind of just the last thing that I wanted to showcase before we end here. Any additional questions or comments, guys, before I wrap us up? I'll take that as a no. Okay, do we have any more questions, Max or Gary, on our YouTube stream?
No, I think we'll continue because, as I said in my introductory emotional speech, this topic is now for years to come. So, and yeah, I mean, decision, okay, fiat money, cash, or risk stock, or risk, and then risk stocks or crypto. Okay, and crypto, Bitcoin, Ethereum, or alts. Yeah. This question will be with us for the next years. There is no other way. So it's fine for our today talk, and yeah, we'll be happy for like feedback, comments, desires, and can structure it more in specific ways.
Yeah,
when we talk.
For sure.
Yeah. So for now, it's, I think it's a lot. I don't know to digest.
Yeah.
But we try to push it in 1 hour. I think it's.
I agree. Yeah, so guys, if you are kind of not maybe completely, understanding what we discuss, everything that we discussed today, or if you would like more information, once again, first of all, check out santiment.net. And check out the insights page, because we are going to be writing a couple of insights related to this particular topic over the next day or so. And also join our Discord, because as I mentioned already, we talk about this stuff pretty much on a daily basis in our trading channel. So if you really don't want to wait until next Friday to figure out how you can leverage this data, on-chain and social information to elevate your trading, this is the best place to be. So until then, thank you everyone for joining me on the call, and thank you everyone for watching this either live or after the fact. And I'll talk to all of you in 7 days.
Thanks, everyone.
Yeah, thanks. Bye.